have a D2C panel today, you ask? And what really is the importance of direct to consumer? As somebody who has really observed businesses for the last 14 years, I see it is the biggest structural change that has happened in the way even organizations and businesses function. What really is direct to consumer? And what really is it telling you about how enterprises should function? D2C meaning me, Shrija today, thinks of an idea, has the wherewithal and the willpower to make that into a product, and doesn't really stop there. I also have the conviction that I will be able to sell my product to the consumer directly. Gone are the days of the reliance on the HULs and the PNGs of the world, where you need to have a very strong distribution system. Now, if you are a male or a female entrepreneur, powered with an idea, powered with a strong will and desire to sell your product or service directly to the consumer, you can. And all of this is actually part of a very fundamental way and change the business are running, which is decentralization. We all don't believe anymore in unified structures. We don't believe in one central authority or unit basically guiding our fortunes. We don't believe in that anymore. We are seeing that happening in a very big way in the US, in the banking system, and is now coming across all the sectors. Banking, you have fintech apps, barring that they can't directly give loans to you because of the RBI regulations. How many of us, tell me, spend our time, go to a physical bank rather than a fintech app? Can you have a show of hands? How many of us go to a bank, then on a fintech app, how much time do we spend on that? People, in a bank or a fintech app. Similarly, on the consumer side, today, if I have to buy a hair serum for myself, where do I search first? Google or Instagram? Okay. Media, our own industry. I think there is a huge way of independent media, which is why people like us come in, having spent so many years building brands, building news organizations. So this is basically a wave of decentralization, and direct-to-consumer brands are having a great run. You are seeing companies being built of very large valuation, basically on this premise, and the premise is decentralization. And I think it's very interesting. I call some of these women Instagram entrepreneurs. Look at what they have done. They have actually basically mobilized Instagram as a social media, has mobilized this amazing sense of entrepreneurship in women otherwise. If I'm a homemaker at home, I have a 10-year-old daughter, but I still want to sell things. Where do I go? I'll first go to Instagram, seek inspiration from my cohort and fraternity. And if I'm lucky, I'm being able to sell 50, 60 products. And that is where my entrepreneurial journey begins. This is fascinating. So I think we have to start seeing social media as not necessarily only as a way of communication. These are systemic cultural sort of norms being defied. And we need to understand that. We need to understand the power of conversation. We need to understand the power of community. We need to understand the power of camaraderie. And D2C entrepreneurs are nothing else, but they are encashing on that. They're making money out of the power of community. And my job in the next 30 minutes that I have is to try and understand from these entrepreneurs and an investor here that what really is the game plan, what really is the mechanics of it. And Delhi is the D2C capital of the country, let's face it. This is the place where I think every third household in Gurugram has an Instagram entrepreneur selling a skin cream or a hair product. So I think it's a great idea to take sort of around on this table what you all do in 1 minute as part of your D2C journey and what is it really? Yeah.
Hi, I'm Shaloo and I work for a company called Zyod. It's a manufacturing hub for apparel garments and rightly stated, experience about 27 years in this industry of apparels, understand for how the manufacturing is being done, how the selling has been done. Thank you.
Thanks for that. Congratulations on your fundraise.
Thank you.
Large fundraise.
Yes,
And
thank
that happened just after our podcast.
Yeah. Thank you for that.
Yeah.
Hi, I'm Prayag. I'm part of the investment team at Firesideventures. So we invest in very early stage consumer brands. Typically, we come in very early at a pre-series A or a series A stage. We are right now, managing almost close to 3,000 crores in terms of AUM. Some of the bigger brands which you may have heard of would be brands like Mamaearth, Yoga Bar, Badam Teas, Slub Farm, and and all of these companies, you would be the first institutional investors on the cap table.
Wow, incredible. I think you've got some really incredible brands, yeah.
Hello everyone, I'm Anuj Nevetia, co-founder of baccabucci Footwears. Baccabucci is a decade-old brand. We started when e-commerce was at a very nascent stage in India. The idea and the concept altogether was very new in India. And we've been bootstrapping for 10 years now, have served more than 4 million customers, recently featured on Shark Tank India Season 3, and here to, share knowledge as much as I have, and I believe I also am here to, learn from all of you as well.
I have to give it to you 10 years in bootstrapping.
Yes, 10 years bootstrapping.
Amazing. We'll get to know more about that. What about you? Himanshu has been on my podcast.
Good afternoon, everyone. My name is Himanshu Agarwal, one of the founders at Deyor. Deyor is an experiential travel company that we began 8 years ago. Through this journey, we've pivoted several times. Finally, we believe we found a product market fit. We're essentially doing community-based trips wherein a group of like-minded people come together and we curate a long-stay experience for them. Now we're trying to scale it up. We're catering to more than 10,000 users on a yearly basis right now. Trying to scale it up, add more experiences, and I think post-COVID, the ride of what they were calling it as revenge travel in the beginning, which has sustained, and the changing habits of millennials, we're trying to cater to that and bring the whole travel booking, holiday booking experience online.
Thanks for that, Himanshu. And it's like right to you put, I think your business must have gone out in the COVID space, right? So let's begin with the challenges and tribulations, because from a distance, it all sounds like very, very fascinating for D2C. I have an idea today. I'll sell it on Instagram and I'll become famous. I will raise VC money. Crazy valuations will happen. It's not that easy. We've got to sort of face it. It's not easy. Here is an entrepreneur who actually went out of business during the COVID time. Himanshu, talk about that.
I think, of course, during COVID, as a travel company, travel and tourism was obviously one of the worst affected industries during COVID. Those 2 years, we were almost, at zero revenue, and we absolutely had no idea in terms of what and how it would end. But I think it taught us a lot. During COVID is when we realized that, how it is very important to build a sustainable, profitable business. We learned cash is king. Obviously, we had to take a lot of hard calls. We were a decently sized team at that time. We had to cut down on a lot of expenses, and we survived. Unfortunately, many travel companies, ceased to exist during and after COVID. Our main motto was to survive through that, engage with our users, engage with our audiences, one way or the other. And then post-COVID, that learning remained with us. We till date are building a profitable business. We are seeing very good growth month on month, quarter on quarter. But that is only because when we lay down the foundation that we have to build a profitable, sustainable business, we have to grow, we have to scale it. But that can't come at the cost of profitability, and that can't come at the cost of losing money.
So that learning came during the COVID time. But how did you survive? Zero revenue. So you had to let go of a lot of things.
Absolutely. I mean, we had to let go of a lot of costs which were not important to the company, and then obviously we had to cut down on the team. Fortunately enough, we had a core around us which understood. We were very open and transparent with them that listen, we're not making any money. We all have to take pay cuts. Me and my partner Chirag both did not draw salaries for a good sizable amount of time. The idea was we did have, fortunately we were able to raise capital right before COVID hit, but then we did not want to use that capital to survive during COVID. So we did not touch any of it.
So money was in the bank.
Absolutely, money was in the bank. The money was there to grow. It wasn't there to survive. So the idea was on cutting down all the costs possible, and then we knew we can come out of it. We knew that this period would end, and when it ended, we saw a huge surge in travel. We started launching newer products. When we saw success in a particular territory, we started going deep into it. When we saw more success, we started replicating that model across several other territories. And yeah, I mean, now we're dealing in a lot of regions within India. We launched Southeast Asia, various parts. We're doing community trips to, Azerbaijan, Baku, Bali, Vietnam. And a lot of young, like-minded millennials who have become a part of a community are now coming, traveling with, each other, making friendships for a lifetime. So initially after COVID, we thought that this surge of travel would at some point plateau because they were calling it revenge travel. But fortunately, it sustained. You know, a lot of millennials also we saw a way of a change in their spending habits. We saw a change in how they were spending the disposable income. They wanted to travel differently. They wanted to gain experiences. And we saw an opportunity and we built a business in that.
So there were learnings. You had to let go of a lot of things and you sharpened your business model. And that's sort of continuing. I want to come to you now, Anuj. 10 years of running a bootstrapped business, baccabucci. Tell me everything about it. Do you manufacture the shoes? And what is this intent of not raising external capital? Why?
Well, so for us, the journey has really been long. So when we started, as I said, e-commerce was at a very nascent stage. So when we started, Amazon was not in India, and Myntra had just came in. Flipkart had just shifted from books to becoming a marketplace. So then the websites used to be Snapdeal, Traders, Groupon, EAB. These were the websites, eBay. So we started with these websites. Me and my co-founder, we both come from a chart accountancy background. But I was working with E&Y in Gurgaon. My co-founder was into loan syndication. We somehow knew that this is not what we want to do. We wanted to do something that's impactful, that's something that's really crazy. And so we could already see that happening in the West with Amazon, that people are really opting for e-commerce. They are trying to shop online. And that is when we thought, like, this is something which will also change the way people shop in India in the coming years. And we started selling footwear online. So having said that, until 2019, until when COVID came, we were largely dependent on marketplaces, because until then Shopify was also not in India. In 2018, 2019 is when Shopify came. Before that, we were also running left, right and center with the agencies to have our own D2C website, but we were not able to get one. So until then, we were doing heavily, we were strategic partners with Amazon, Flipkart and all these, Myntra, Tata Click, Ajio. And so yeah, this has been journey until 2019. And when COVID came, when we got some time to think through as to how now we can probably make it an impactful brand, and because the idea always since beginning was to make a brand, and because we were done with the agencies not helping us, so that is when we took things on our hand and we started learning online as to how to build our own website on Shopify. And we built our website online and we introduced baccabucci.com, and things have changed drastically ever since. So what was 100% revenue until 2020 through marketplaces, today we are doing 50% through our own website and 50% marketplaces in last 4 years.
What are revenues like, Anuj?
We are looking at 135 crores by FY25.
Just by selling shoes?
Shoes is a big category.
Okay, 135 crores by FY25.
Yes.
Selling shoes. And how much of that is coming through your own website versus
50%.
third party? 50%. Okay. And why not raising external capital?
Yeah, so I'll tell you the idea behind me and my co-founder, we both think alike. We always want to include all the modern techs in our business, but also think some way traditionally and the way of, the main pillars of the business, as you'll see the businessmen doing, working around Gujarat and the Chandni Chowks. If you go and talk to them, they'll say, भाई दो चीजों में हमेशा ध्यान रखना, business में growth और profitability होनी चाहिए. So धंधा. So that's where we always were very strong. We always had all the modern techs, everything. You'll see our website, you'll see the best of the best plugins are there, but we never compromised on our profitability. So we have, ever since we have started our business, we have always been profitable and we have always seen growth. In last 3 years, we are growing at 110%. But yes, having said that, we did have a plan to raise funds, but we wanted to scale to an extent where we feel that now from here on to trigger and accelerate to a next level, that is when we will raise funds, and not just to raise funds and have people on cap table and then have an extra baggage to just look at MIS every day and give them and just think day and night how I'll end up giving them exit. I wanted to focus on business first, And still, the idea is that now we are raising funds. We have spoken to quite a few investors in India, because now we are planning to export. We are planning to have our own exclusive brand outlets. We have already started Dubai and Saudi this year.
That's incredible. And Prayag is listening to you very, very carefully. That why is he saying no to VC money? He's just thinking that you're already sort of in conversations with other VC investors. What are your margins like?
We are EBITDA positive. We are close to 9-10% EBITDA positive. And Fireside, and I guess I've spoken to Fireside also. I mean, what I have seen is that these days a lot of founders and the new age D2C brands, I have met quite a few founders. They have this blueprint of not having an impactful brand, but rather how I will end up raising and then how will I end up exiting in 2 to 3 years. That's the primary goal these days, which is where I don't align with. I think your business and your product should be your first priority, and not raising funds ultimately and taking an exit.
That's sort of very, very well put. I just hope entrepreneurs are listening and taking the notes copiously. Here's an entrepreneur who said that I can reject VC capital because my mindset is not to raise a business and sell it after 3 years. I'm not a trader. I'm building a business as an institution. Incredible, Anuj, seriously. And now you, Prayag. How many of entrepreneurs are out there like Anuj Navetia of baccabucci? Do you think there are many, especially in the D2C space?
I mean, just on that point, I think we also as investors clearly believe that you should build businesses in a very sustainable manner. Intrinsically, our DNA is not to, we don't believe in that burn and scale model. We believe that businesses which have good foundations, good unit economics, scale in a sustainable manner, and that's typically the model we look to back. We believe in backing brands, and our vision always is that, we want to build iconic brands from India, ideally which can eventually go global. So we also don't believe that, you invest in a company and you flip it into 3 years and, you do a strategic exit. We feel that what Mama Earth, right? I mean, it's a brand which went on, has got listed, and it's there it's an iconic brand house which has got built out for the long term. So I think we are also very purpose driven. Of course, we have investors and including SIDBs and LP in our fund. So financial returns are important, but I think the greater purpose for us is to build brands which are there for the long term, and like I said, and built in a very sustainable manner. So yeah, I mean, kudos to you. I think the way you are building it out, I think we strongly believe, I think capital, to your question, Srija, I think the founder should only raise capital when there is a need for the business to raise. If the founder feels that, hey, you know what, I can scale it up without requiring capital, you should not raise capital for the jazz factor or just that, hey, you know what, this is the valuation I got. And the capital raise should not be determined by the investors you're talking to. It should be determined by what the business needs. If the business at a certain point in time requires certain capital to scale, and you feel that it's not in the best interest of the business, if I don't raise money now, that's the time to raise money. And it should not just be, because you want to get marked up to certain valuations. At least we believe in the way you're building out your brand, and we also feel that your approach is absolutely right. As and when you feel it's relevant for you to raise money, that's the only time you should raise money.
But Prayag, I think there's a bit of a slight disconnect when it comes to VCs, sure, especially sort of putting money into D2C brands, because a lot of capital is easily available. There seems to be this overtly sort of positive narrative about D2C brands, post especially Mama Earth exit that has happened. How much of that is for real? Because D2C from a distance to me looks like a sham, if I were to honestly put it to you. How much of it is product and how much of it is marketing? To me, it looks like 80% marketing and only 20% product. And the biggest problem in this entire equation is that this marketing money is coming from VCs. And they're very, very happy to fund this cash burn. It's a board-sanctioned cash burn to give money to Facebook, Instagram, and the Googles of the world. In the last e-commerce run that happened, only 3 people made money. Amazon, Google, VCs did not make money, and of course the entrepreneur was loss-making. So the entire money is going to marketing. Why are VCs doing this? What really is happening?
Sure. I mean, I think every market goes through its cycles, right? I mean, I agree to some extent there were excesses in the market, and especially in 21, 22. But if you see the funding environment in 22, 23, 24, it's significantly turned. I think the mindset, even among the investing community, probably had moved towards growth at any scale. Now it's sustainable growth. People are looking, there's a lot more focus on looking at unit economics, business strength in terms of core, business where there is a clear path to profitability, backing those kind of businesses. So I think that every market and every, whether you talk about any kind of market, whether you take capital markets or you take private markets, there will always be business cycles when there will be excesses. Market is never at fair value. It's always either undervalued or overvalued. And there will always be booms and busts. In the boom period, there will be businesses which ideally should not have got funded, do get funded. In the bust period, there will be businesses which should ideally get funded but don't get funded. So I think it's a cycle. On specifically on, I think D2C, I think what you initially mentioned, right? I mean, decentralization. See, what is D2C allowed you basically to do? What it's done is the distribution channel, which used to be a moat for the large incumbents. Now with digital platform, whether it's your own website or it is marketplaces, is allowing you to build that brand equity in the consumer's mind, and it is democratized the distribution layer per se. Earlier, unless you could never match in the 80s and 90s, even early 2000, you could never match the distribution moat of an HUL or a or a Marico and all of these big global houses. But now with, let's say, whether you call Facebook, Instagram, and all, and even the online marketplaces, like even I think what I mentioned earlier, like 10 years back there was only Amazon, but now you look at the number of e-com, Q-com, verticalized commerce channels which are available. So what are, I think D2C is, of course, that is one channel, I would say, which is your website. What it is allowing you is, to actually create your brand equity online, whether it is through Facebook or Instagram or through any of these marketplaces. Of course, you do get sales, but allows you to create your brand equity online, and eventually beyond a point you start leveraging it offline. But for that offline consumer pull to happen, you have to communicate to the consumer, hey, you know what, this is my brand, this is what I stand for, which is what you are doing through the online channels, whether it is a Facebook or an Instagram. So in a way, it's an amazing media channel which helps you create brand equity, also gives you revenues because that consumer also comes and buys on your platform. And you're also, initial days, you will see them leveraging it on online marketplaces, and thereafter eventually they go offline, right? So I think that is what it is done. It is democratized for new age brands to actually come and compete with the incumbents, which wasn't possible maybe 10-15 years back.
Shaloo, I would like to sort of come to you, and I'll again come to Prayag, because I don't agree with a lot of what he said. I'll come on that. Shaloo, it's incredible what Zyod has also done. And I'll tell you why, because it has a pretty unique spot as B2B manufacturing.
Yes.
Can you sort of talk to us a little about that?
Okay.
And your conversation with your investor in this round of funding that you've had. I would like to know a little bit more about that, because when was it, in terms of the product market fit, what was that inflection point when they thought that you are now prepared and ready for this round of funding? Because you rate substantial now this time. Yes.
Yes. So first of all, the investment is about 18 million we got, and it's stated everywhere that it's 18 million. Okay, so coming to the point, the company is started by Ankit and Ritesh, and when they started the company, it's a bootstrap company as a startup, and eventually when they started moving ahead, they started feeling the pinch of globalization of the product. If you look at the product, we are looking something which is sustainable, which is, a woman would like to wear a fashion, right? If you look at it, the fashion starts from Europe, from UK market, move down to US, and then come to India. So we want to bridge the gap, because we wanted that Americans look as good as Indians look as good as Americans. So this was a thought process we have in our mind. And we started moving towards the globalization as a second step. To go towards the globalization, yes, the funding is required, because a lot of money is required to showcase in the trade shows and showing that what we are doing. A lot of marketing is required, and very rightly said by Mr. Rathore that the first thought is that you need to have a team in place, it's not a one-man show. It's a complete team is required, and I totally agree with this thought, because the company thought like that, and then they made their channels for a particular area to handle. And this way, we started working. And I must say that we have just opened up a factory in Gurgaon. The second factory is about in pipeline, which is I think by October will be functional. That will be about 800 machines. We are total manufacturers, and we are catering to Indian market as well as the national market. So if you look at it, that if you go to overseas, and I'm sure in a couple of years, the Zyod name will be as equal to as big brands if you heard about like Craft or Shahi. So this kind of thought we have in our mind. The mindset of the co-founders are moving towards doing a tie-ship with the fabric area so that we can, control the chemicals which is being poured in the garment dyeing. And if you look at it, a lot of the crops what we are eating has a lot of substance.
Shaloo, I want to just ask you
Yeah.
for Zyod.
Yes.
So who are your clients? So Zara is your client?
Yes.
H&M is your client?
Yes, we are working for Zara, we are working for Anthropology, we are working for Monsoon. If I come to US, we are working for Tommy. We are working.
So you make shirts for them and
Yes,
they
we
put
make
their
every-
label.
No, it's not only shirts. It's the dresses, because it's a category. We are doing women's category, we are doing men's category, and kids category. All three categories we are doing.
So basically, if I'm a Zara, I'm
Yeah.
coming to you
Yeah.
and I'm saying that you could create these 1,000 pieces of frocks, garments, everything for me. You will produce that.
Yes.
You will get the design checked by me, and I, as Zara, will put my label on that. Is that what it
We
is?
do both the ways. You can give your design, but we are working on the design to deliver concept. Because we have a design cell who's working on trends, the mood boards and everything is being curated. The designs or resonate with the market. We showcase our thing. You are more than welcome to give your ideology.
So you're a B2B business, and
Yes.
now you want to become a brand.
Yes.
You want to sell directly to consumer also.
Correct, correct.
And that is why the fundraise has happened.
Correct.
And so you want to become as big as you said, Wildcraft and those examples and names
Yeah.
you gave.
Yeah.
Okay. So you began as B2B and now shifting towards a consumer brand.
True.
Prayag, I would like to come to you and Anuj sort of spending some time on the business model. Anuj, how much of your revenue is there coming from third-party sellers versus your website? You said 50%, 50%.
Right.
How much are you spending on marketing every month?
So currently we spend close to 18%.
18%.
Yeah.
Online marketing.
Yes.
Okay. And when you say online marketing, that basically constitutes performance marketing and
Performance,
giving
yes.
money to Instagram and all of that.
Yeah, it's Meta Google largely.
Okay. How big is your team?
We are close to 100.
And how much capital are you raising?
Close to $7 million.
$7 million. And what will you do with that money?
We're planning to, start our exclusive brand outlets. We are also planning to spend into our product enhancements. We are trying to add more premium range of sneakers. Apart from that, we are also planning to, invest more on good brains in our team and, up the skill set.
So premium sneaker brand, team expansion,
And EBO,
and global expansion.
global expansion,
Okay.
as well as EBOs.
Okay. Prayag, you look at so many D2C brands. If you were to give me what really are the traits of the brands which are exploding, what are the metrics that you see, and go to your drawing board as an investor cohort and say that now this brand is showing signs of growth. What are those 3 or 4 key metrics, the inflection points in the journey of a D2C brands? Because there are just many out there right now. Yeah.
So I mean, obviously we are very early stage investors. Typically at that point of our investment, when we are, like I said, we are the first institutional checks in most of our brands. What we look for are actually broadly two key things. One is that what's that key consumer insight or that consumer gap or need which the founder has identified, and how large is that insight, because that effectively tells you how large the business could be depending on execution. Second is the founding team. I think, in fact, the first is the founding team, because the team is what really you bet on at a very early stage. Because if the team is good, they will see. And we understand as early stage investors, you don't have a lot of answers. And but if the founders are good, they will figure out along the way. They will pivot. They will make some changes in the business model. So I think if these 2 key ingredients are in place, there's a clear consumer insight and there's a good founding team. lot of the other things can be figured out, whether it's the product strategy, the GTM strategy, the brand strategy, the how you build out your teams, all of that I think can be figured out. And at an early stage, we don't expect all of that to be in place. That is
But
something.
Prayag, I think there's a common thing here. A lot of brands look similar. There are 100 skincare brands.
Sure.
All of them are telling me the same thing. I'm vegan, cruelty free. I'm using neem. I'm using Ayurveda. How does one differentiate? As a consumer, I'm so confused. As an investor, what tangible metrics are you looking at? You gave me the thing,
Sure.
hyper 360-degree point of view, कि श्रीजा ऊपर से ये सब देख रहे हैं.
Sure.
Give me the real metrics. How would you differentiate between a baccabucci and me if I were to build a shoes brand today?
So, I mean, I think one clear thing which you look for is there a clear product market fit? Because like you said, it's a cluttered market out there, but is there a clear, like basis what Anuj is mentioning, the metrics, it's very clear that he's got a clear PMF. To your earlier point, is it just perf marketing driven or is there a brand pull? Clearly, basis the numbers, whatever overall numbers I heard, clearly there is a brand pull. Otherwise, what I would see is a lot of performance marketing dollars going in just to, push up the sales. But the question and the inflection point, what you asked, right? In my mind, the one big inflection point is when the brand starts starts pulling down the performance marketing and increase the brand marketing, which shows that there is confidence that hey, even if I pull this back, consumer will come to me for my brand, and it's the consumer is coming to you for the brand and not the product you are selling. You're not a product label, you are a brand. And even like I said earlier, across segments, 80% of India sits in offline channels, right? Which is why every brand goes omni-channel. And one of the key metrics we look for is what is the brand equity, brand recall, brand resonance in the consumer's mind, because that will decide when you go offline, is it going to be a push from the distributor and the retailer, or is there going to be a consumer pull? And that is a key factor in terms of, I think, to the earlier panel discussing scalability or not scalability. You will get brands at a similar scale of business, but one where the brand equity is very strong, one it is not so strong. When they go offline, you will see where the brand equity is strong, the numbers will scale up, the tertiary numbers will pick up, but in the other case it will not. So we have seen that across companies. So I think that's...
So offline readiness is also very important, and pulling from performance marketing to getting into brand marketing.
Yeah, I think basically creating the brand equity in the consumer's mind, where the consumer says, hey, you know what, I want to buy this because this is baccabucci, not because it is showing up, because there's high discount or it's showing up on the price laddering on Amazon. That's the real, test.
Anuj, what were the 5 key mistakes that you did, that you had to unlearn while you were growing baccabucci, which I think a lot of e-commerce entrepreneurs or D2C entrepreneurs are struggling with right now? Can you talk about your experiences on the mistakes, the cardinal mistakes that you did and should be avoided?
I wouldn't call it a mistake. I would rather say that I would have loved the fact if I had started our website like much earlier than we did. So, because though, as I said, we were actually trying, but we couldn't find a correct partner for ourselves, and thankfully Shopify came in here. So yeah, that was one. I can tell you what are the corrects that we did, which I usually see people not doing, is learning to say no. Especially if you are also doing marketplaces. So a lot of time marketplaces try and lure you to, do these sort of marketings and we'll give you these visibilities, and they'll try and lure you to some sort of convince you to come for a disparity in pricing and cataloging and all. So over the years, what we have learned is to say no. Whatever dilutes your brand, you just have to go, keep your head straight and say no, this is not good for my brand. Though I might have some increase in top lines with your particular platform, but overall for my brand, this is not good. So we have always learned to say no. 1. 2, we have always been very minutely reconciling our accounts. We always look for, if you are also doing like 50% of marketplace is again a good chunk. So we have always been very sure of our incidental expenses. We have never allowed any cost center to be in the company. Whenever we identify any particular thing which has a potential to grow as a cost center, we immediately stop. So these are few things that we have always been very mindful of.
Great. Are we seeing the Marwari traits of running a business? We have three Marwari entrepreneurs here, the Agarwal, the Navetia, the Agarwal, and also moderated by Agarwal. So no wonder he's like, any cost center has to be avoided. He's extremely clear about it and having the audacity to say no to your marketplace, even if it's coming at a cost. And I think these are very incredible learnings for entrepreneurs, especially D2C entrepreneurs here. Himanshu, I want to spend some time for you now. You are in a space which is, I would say, a tough space, right? I mean, you have the giants also there, like the Make My Trips and Clear Trip also had an experience, and Ease My Trip, and all of those people had. How have you told yourself, you and your co-founder, कि ठीक है हम 100% market share नहीं करेंगे, we will do 5% only, but we will do that thing very well. That niche we will do it very well, and how have you sort of boiled down to that niche after those mistakes?
I think for us, you're right. I mean, the travels and the tourism space in India has been dominated by some large players over the last 2 decades. I think for us, we also started off as a company which was doing something else in the beginning. Throughout the journey, we must have pivoted at least 4 to 5 times to now what we believe is a sustainable business model. I think what we realized was that we need to identify a need and we need to sort of build a product around that. We realized that the millennials, the people who are traveling, our target audience, they did not want to travel the way that our parents did. They did not just want to go to a place and take off certain sightseeing points. They wanted to gain experiences. They wanted to experience the culture of a place, and they wanted new experiences. And to our surprise, even we saw that. They are coming back to us again and again. We are seeing that an average guy is traveling 3 to 4 times in a year with us, whether it is a weekend getaway or it is a long stay experience. We realize that the giants and Make My Trips and all these players, they are dealing in the space. I mean, they are massive when it comes to air tickets, ticketing. When it comes to booking hotels, these are commoditized items. You would go to a Make My Trip, you would compare the flight cost with the Ease My Trip. Wherever you get a cheaper deal, you will book it. You will book there. We were very clear. We have no intention to get into booking air tickets or hotels because
that space is taken.
Yes, and it is. I mean, the margins. We realize that we will not be able to compete with them. The margins are going to be very thin. We need to build something which will have a sizable ticket value because there is a customer acquisition cost online. And then a sizable gross margin. We need to build around that. And we realized that when it comes to booking holidays online, there was no player, there was no brand in the market which people could trust and say that, okay, this is the brand I want to book a holiday with, right? Or this is the brand I can curate or personalize my trip with. Or if I'm a solo traveler and I want to join a group of people to go to, let's say, Ladakh, I want to do a bike trip across the terrains of Ladakh.
So focused on trips. Complete
Absolutely.
trips.
Holidays, trips, getting people from the same age bracket together, wherein they travel together. By the end of the trip, they come back and they are friends. Then they want to travel together again. We end up seeing about a 30%, and then a lot of focus is put into product because again, the barrier to entry in this space is not very high. You see a lot of small communities, a lot of small players operating in this space. That is why the idea was to build a large brand, have a nationwide presence, have a presence across various parts of the country, outside the country.
So what is the end game? Like a Make My Trip buys you out tomorrow. That's what you're looking at?
Actually, like I said, during COVID, we did learn a lot of things. I think we are seeing that as a business. So for instance, if right now we are seeing an ARR of 25 CR, we're right now selling holidays worth around 25 CR on our platform annually. We know that we can take it up to 100 CR profitably, sustainably. So we see this as a business which could be a lifestyle business for us, grow it year by year, and I mean, why not, right? Because
could be a lifestyle business. Why would you say that?
No, because I mean, I don't.
I think there's no problem in saying that I am building a business to sell. Yeah, there are a lot of businesses to sell. In fact, the entrepreneur K. Ganesh, if you look at him, Tutor Vista, he, in fact, I remember in an event of ours, the VC Circle event, the yesteryears, he actually made a presentation on how to build a business to sell. There's a playbook now. And if you look at the likes of Karma Ayurveda what they have done. Forest Essentials, they had such a huge equity round of funding coming from a foreign investor. I think there's absolutely no problem as long as you are very clear as an entrepreneur that I am building this business to sell. So, and he actually created this playbook that if you have the mindset to build a business to sell, then you engineer it that way from the very beginning. And that you start making your business plan that way that after 5 or 7 years, I want the strategic buyer to call me. So that is also one way of people running businesses. So there are people running businesses to last, and there are people running businesses to sell. So there are both kinds of entrepreneurs.
Absolutely, I completely agree
Yeah.
with you, and nothing wrong with the ones who are trying to sell
See, I
it.
took you out of your inhibition now.
No, but like I said, we actually see this as a business which could substantially grow both in terms of top line and bottom line. And
So what are your revenues like and what is your margin like?
So right now we are doing about 25 CR worth of holidays are being sold on a platform online. We see a typical gross margin of about 30%, and we're netting about 6% EBITDA profit.
Margin rich business. What about you, Shaloo? You must be minting cash, yeah? Manufacturing B2B. She's
Yeah.
smiling also.
No, the point is this, it's great you are earning, the EBITDA is positive, so as our EBITDA is positive, and we are at about 25% margin right now, and I don't think so in manufacturing you can't go above 25%, it's almost a good margin.
And what are your revenues like right now? 100 crore plus?
Yeah, it's 150.
150?
Yeah.
Okay, so 150, 135, 25, and we have somebody who is owning like so many brands and managing 3,000 crores in the
Exactly.
So now the last question to sort of really conclude this wonderful panel. We spoke about this word and we used it quite a few times, brand. I have to build a brand, we invest in brand. What makes a good brand? I want each one of you to talk about one specific trait about brand building. Some of you said about frugality, some said about sustainable growth, some said about not coming at the cost of environment. What makes a good brand in 2024?
Okay, if I start with what makes a good brand is I must say that, when the customer think of buying a shirt, let's say, so the first thing should click your name, your company's name, and there are various parameters how it will happen, because you have to make a connection with your customer. It should be an emotional connection. Like I'm not here to talk about any other brand, but I'm just giving you an example. There's a shampoo called Revel. They give a personalized thing. They put your name on the bottle. Once you start ordering that, they start a lot of questions. So that kind of emotional connect is required with any brand. This is what I feel.
We should hear the investor. What makes a brand?
Just adding on to what she said, right? It's when the brand becomes the category. Think of photocopy. You say
That's very
Xerox.
well put.
You
When
say
the brand
Xerox.
becomes the category.
You say Xerox. You don't say photocopy. So that the brand personifies the category. That's the real success metric for a brand. Like nowadays, when you think of, let's say, in the US market especially, like look at Apple. Like when people think of phones in US, they just say Apple. There's nothing beyond that. I think that the brand personifies the category, and that's ideally what we want to build for.
Very well put. What about you? Anuj will say, people coming to the store and say, let's buy baccabucci.
No, so if I have to say in one word, brand means trust. And you know what trust means? We usually see this between a father and a son, mother and a daughter, and also with your best friend. So you trust your best friend, right? Whatever they say, you'll believe. You'll not go and recheck through third party or through someone. So that's what brand is. If you are saying that this is a good product for you, there should be this trust in the consumer's eyes that if this brand is saying, I trust them. So if you are able to crack that, you are a brand.
Well put. What about you, Himanshu?
I think for us, what we touched upon a little earlier in our discussion was that a lot of brands are now running performance marketing ads and acquiring users online, which has become sort of a trend. I think for us, what is important is that how many of our users who have traveled with us, they come back and travel with us again. The organic growth that we are seeing, again, like he said, in our industry also, trust is a very important factor. An average Joe is spending 50 to 60,000 rupees with us, 10 days of leave from his office. So his experience has to be really good, right? So he really has to trust your brand to a book and then travel with you again. And then if he likes the experience, he comes back and travel with you again. So for us, I think we're trying to build a brand which people can trust, book their holidays with, and then how many of them end up coming back to us and book again. That's what we're trying to
And a
achieve.
lot of that traction might also be from tier 2 and tier 3, I'm guessing.
Yes, I mean that's
Yeah, it's
obviously
all
there.
it's all about emotional connect, because the trust is built with emotional connect only, so it will be there.
I think we had such an incredible panel. Can we hear it up for them? They were all so candid and sharing their playbook. I do know we have lots of questions for the D2C panel. I will just allow two because I know it's a space brimming with excitement. I think some of you are here. Yeah. So I will just take two questions and then because we are running late because of the rains today. Yeah. Yeah.
Hi everyone, I'm Gaurav and I represent Earth, which is a climate tech company. We are providing clean air in indoor spaces through retrofit solutions with AC systems. So my question is specifically to Anuj with respect to his B2C experience. As you told Anuj that you have been on the marketplaces since last 10 years and 50% of it is coming through online channels. I would like to understand the tactics that have been most successful for you, specifically with respect to Amazon versus Flipkart, because the way Amazon has a comprehensive ad dashboard, Flipkart doesn't have that. But what were the strategies that that helped you in growing on Flipkart? Because we have been running decently well on Amazon, but somehow we are not able to replicate the same on Flipkart. So that is one question. Another one is how has been your experience with agencies? Or do you recommend going with agencies when it comes to performance marketing, ad campaigns, or do you believe that capacity building within the team is the better way to go forward when it comes to early stage startup like 3 years or 4 years of startup? And last question is
One question per person. There are too many questions. Only one question. Where is the other question? Anybody else? Okay, I think you look like you have a question. Faiz. Yeah.
Oh. Mike, Avnish.
I'll just take two questions. We don't have time for more.
So thank you so much for the values you people gave. So I'm into manufacturing of you can say all natural, sustainable FMCG daily need products. But but we have two categories. One is personal care and another one is home care. So I'm also the part of Shark Tank India Season 2 finals, where the judges has advised us to segregate these two categories in two different brands. So, and also we are also into incubation of IM Bangalore NSR cell. So they also gave the same advice. So we took this step and created two brands. But when we like represent ourselves, then again I have to say it's the same story that we have two different categories. So how to project yourself as a company, as an institution, so that people can how people
Faiz,
can
you can use Hindi, it's fine.
yeah, किस तरह से आप आपको लें as a brand. That's
Yes,
the
I think
issue.
there are two questions. One is for you, Anuj, on the reliance on marketing, on performance marketing, and you're dealing with Flipkart. And the second is on storytelling. So maybe Prayag, if you want to take that, yeah.
All right. So coming to your first question, Flipkart versus Amazon. So see, I'll tell you, both these marketplaces have their different niche. They both have different target group altogether. So you first have to see what your brand stands for. Flipkart is more price driven, whereas Amazon is more customer centric. You'll see that even if you have to go and purchase something, you'll first go and see if it's available on Amazon because you somehow trust them for faster deliveries. I believe I'm right, correct? So now the thing is that, are you okay with disparity in pricing? I believe no, because that dilutes your brand. So as I said, we always said no. We always try and ensure that what we want to do as a brand, how I want my brand to be built, and we are okay even if we are not able to clock enough revenue through Flipkart, we can probably figure it out through other channels, but we'll never compromise on something that will dilute our brand. So even if you see in our case, yes, we do more on Amazon versus Flipkart, and we never agree. They come to us with a lot of offers, and with something which will which can easily increase our top line at Flipkart too, but we do not agree to that because I somehow believe this is not good for our D2C. Second, coming to your whether to have agency or have an in-house team. Ever since we started, we always had our in-house team. Because of the Shark Tank season 3, we saw a huge influx of traffic on our website and the orders and everything. That is when we finally had to, despite of having our in-house team, go for an outside agency for performance marketing like 3 months back. Otherwise, I am always in favor of having our in-house team. Our entire content production, everything is in-house. When I say production, as to content production. So yes, go for building your in-house team always.
Anuj, I want to just ask you one thing, that these baccabucci shoes,
Yes.
do you manufacture them yourself or you're
No.
importing it from somewhere?
No. So they are all contractually manufactured, and none of we do not own any factories. So, but yes, we do have our own design house, and we have designers in house who design shoes for ourselves, and we guide. We do hand holding with the factories. We have standards that is there in place. We have SOPs in place. We do a lot of lab testings and everything else that needs to be ensured for a shoe to be a good product. And but yes, we do not have our own factories.
Okay. Yeah.
I think just to your question, I think I think the feedback which I think shared with you in terms of why have a separate brand for the home care and the personal care. I think if you think from a consumer lens, right? I mean, if it's a home care brand like a Lysol or a Harpic, would you buy personal care products from them? If they were to come and sell you skin creams and hair gels, would you buy it? Most probably the consumer won't, because in consumer's mind there is always a persona of a brand. Okay, this guy is a market. This product works for this particular category. It's very hard to straddle across such diverse categories. Like even if tomorrow a personal care brand were to go and sell food products, would the consumer take it? They'll be thinking, "Hey, this is a personal care. They do application products." That's probably the reason I think the feedback maybe I've got in other forums. On the two brand, on how to manage that. See, so we come from a school of thought, at least, where we believe that running two brands is almost like running two businesses. Running one business is hard enough. Running two businesses even is 10x tougher. And generally, what we advise to our portfolio, and some of our portfolio companies do have multiple brands, but generally the way it's worked out there is once they have scaled up one brand, they have figured out the playbook. Hey, what is my brand playbook? What is my GTM playbook? What is my product playbook? Once all of those playbooks are in place, they have got one brand to a certain scale. Then you leverage those playbooks which are already built out for the different areas, and you build out your second brand. But trying to build them both parallelly is something which is really tough. Like I said, it's like running two companies, and any investor most investors would always want the founders to be focused on building one core business, which is probably the reason you got that feedback from.
I think before we wrap up, I'll just do like a quick rapid fire with all of you, because I think no panel of Shrija is finished without a rapid fire. And Prayag knows it because his bosses have gone through it also in the past. So he knows the sort of what it is. So I'll start with you only, Prayag. The most overhyped D2C brand in the country.
Probably say MyGlam.
MyGlam, okay. The most underrated D2C brand in the country right now.
He's sitting next to me.
Okay. I would also like to ask you that often entrepreneurs pitch to investors. Today, I want to put you on the hot seat, and you should do a reverse pitch. If you were to sort of pitch to entrepreneurs about one idea, or maybe one theme or one market which is unexplored and you don't see of, what would that be? One idea that you would have liked to have, say in the D2C space, and it is not there.
I think several ideas come to mind, but I think more than ideas, we follow trends, and I would say the Gen Z trend is real, and we are seeing manifestations of that across segments. Like we've seen that in fashion now with the sneakers. I think what he was alluding to, a sneakers a big culture among Gen Z, and I feel that that's a big segment which which one of our portfolio company plans to get to that segment. But so I think that trend is a mega trend which is going to play out, the entire Gen Z trend. The consumer mindset is very different. The consumer there is very different from the millennial consumer. They are willing to borrow to spend, which is very unlike our generation and definitely very different from our parent generation. And but they are saying, hey, you know what? We are far more experimentative. We want a lot more options, and that trend is going to manifest itself across segments, whether it is beauty or it is footwear or it is fashion. And that's a mega trend we are following. And if I had to pitch an idea, so we always follow the consumer. We never follow a segment.
So
And
Gen
that
Z
is-
space.
Yes, absolutely.
Okay. Anuj, I come to you now. The most overrated D2C entrepreneur according to you?
Please don't put me in this. No, I don't think so. I mean, I'm really don't no, I have no idea. I think I am.
Okay.
I'll call my name Anuj.
Okay, the most admired D2C entrepreneur that you sort of really revere.
Yeah, so I think I personally admire Ritesh Agrawal and Piyush Bansal a lot. OYO and Lenska.
And how was your Shark Tank experience? How has that fundamentally changed your life?
Yeah, it was amazing. I mean, we were there inside the tank for almost 2.5 hours, though the episode looks like 18 minutes. It was a lot of Q&A. We had a detailed discussion on branding with Dipinder as well. We agreed on some points. They didn't agree on a lot of them. So it was nice overall. It's just that there are no retakes. You have to go inside a lot of cameras and crew and just deliver in one take. You are not allowed to retake. You have to pitch. Even if you fumble, it will come as a fumbled pitch on the television as well. So there are a lot of pressure. We are not pro actors, but then also at the same time we have to pitch your business. So yeah, it's good.
I think I have one question for you specifically because you're a bootstrapped entrepreneur, and we had such a fascinating talk by Mr. Sandeep Verma just before your panel, and he was talking about the CGTMSC and basically the collateral free. I think it was very, very fascinating as to what the government is doing. Did you also have those experiences in your journey where you said that debt is a better route, or collateral free is a better route, because it took you a while to become VC ready? So why not debt? You think that you experienced with debt?
Luckily for us, we in our journey have never been in a situation where we had to take debt. But yes, if you feel that there is some opportunity which can be any which ways managed through debt, that's the best way rather than diluting your equity. So yeah, I also believe that if there's some opportunities where you feel that if we tap on, this will really help us and our financial support. So that's the best way to do it. Go for debt first before diluting equity.
Thanks for that, Anuj. Himanshu, I come to you now. At the same question, and you can't sort of stuck it. The most overrated D2C entrepreneur.
Again, I'm not sure. I don't think I'm in a position to just call somebody overrated. I feel, but there are a lot of brands which have come up in the wellness space. I mean, I remember there were a few patches that have come up which track your sugar levels, and a lot of people have just, I mean, it's the same tracker which is the same company, and everyone is just selling the patch on top of it and branding it and selling it at different prices. I found that a little overrated in terms of the company and the proposition, but in terms of the founders, yes, I'm not sure.
I completely agree with you. A lot of greenwashing is happening. This is Ayurveda, this is cruelty free, across skincare and beauty and pharma for sure. I come to you now, Shaloo, and I have a sort of a very separate question for you. As someone who's a female leader in a growing brand, I would say, how integral are you in part of the decision making? Have you ever been able to feel like, are you a diversity hire? Or how integral are you with the founders in building the business? And how much ownership you have in the company?
So working as a P&L, so my duty starts with, that either the brand is making any profit or not making any profit here. To evaluate that, the co-founders, what we have, Ritesh and Ankit, they are very open about the conversation. They accept, what we give them, the data, and the evaluation is done on, you can only make the profit when you have a repetition of the customer. Otherwise, it's just one man show. So the data has been provided. We have a huge library with us where we have the complete data. those things were pulled out and being shared. So yes, the company heard you very well, and I must say that in mostly a lot of decisions I'm there involved. Either it is a sales decision, or it's investing in another company, like the way we are building up a factory. So I'm involved in the decisions what machinery to go for. I've been heard that way I say that.
And the better here, you're deciding the P&L. Thank you for this incredible panel.